We now move into discussion that sits at the heart of accelerating autonomous technologies, how we finance, insure, and de-risk the next generation of asset classes. This panel will explore investment readiness, regulatory considerations, and the partnerships required to scale autonomy toward 2030 and beyond. Dear panelists, the floor is all yours. Thank you.
Microphone problem? Yes, there we go. Now you can hear me piercing into your ears. Very good morning, everybody, and welcome to this panel. Financing and insuring a new asset class. What are the challenges? What are the opportunities? Now, we were backstage, and I found a few fast facts, which Stefan, I've got to say, completely decries, but we'll give them to you anyway. AVs, robo-taxis, what size is that market going to be? According to McKinsey, who we all know and trust, $300 to $400 billion. Heavy-duty trucks, that's going to be $600 billion. Where's it going to be biggest? Possibly the US, possibly in China. But there are multiple issues with this new asset class. So what we've done is we brought together a pretty interesting panel. We've got the VC at the end, we've got the insurer next to him, we've got the development bank alongside us there with Khalifa, and we have Ramon, who has built a $3 billion book of aircrafts, along with Shama, who's involved in perhaps the regulation of this. So I want to kick off, first of all, going straight to the insurer. We are going to be one of the fastest growing test beds of data for insurance companies, which is ground zero in this discussion. How important is it that we are that test bed of information? What are the insurance companies going to be looking at? Most importantly, when it comes to autonomous vehicles, and we can deal with flying after that. Good morning.
Hello? Yeah, we go. So I think in this particular aspect, this is a new asset class, and there is no historical data available. So we need to treat this as more of a usage-defined and a revenue-defined model rather than a residual value model financing. And here, the value will be derived more from uptime, connectivities, and performance. From our perspective, we are looking at also approaching it differently from our underwriting aspect. And we are looking at creating technology-based platform assessments, which are again looking at the value and the risk from cyber, from network connectivity, from operating resilience perspective. Mm-hmm. And we also enabling our own capabilities internally to cater to this new asset class. So we are doing innovation in our underwriting and actuarial backbone in terms of using AI and advanced analytics. Of course, it will require, as you mentioned, a lot of test data. It will require sandbox environments for collaboration between regulators, insurers, and the authorities to have a safe environment in which we can test these products, we can collect data from real products and real users.
And I think you're right, that phrase sandbox environment, I think will give everybody a lot more capacity to deal with what comes in various forms of autonomy. Stefan, good morning to you. When it comes to financing autonomy, make that come alive, because it can be anything from vehicles to robotaxis to drones, military AI, civil AI. What is your domain, and how do you look at the financing aspects of autonomy? Good morning.
Test. Can you hear me now? I guess, yeah. So for financing this new era of technology is very interesting, right? When you're investing in software historically, you were backing something that is extremely scalable, right? In the last 5 years or so, we saw a significant shift towards hardware, where we obviously now see multiple of the next generation aircrafts outside, obviously autonomous cars and robots. and they are not far distant science fiction anymore, but they're becoming a reality. Yeah? However, from an investment standpoint, we believe that the CapEx that is being spent right now and the heavy investments also in AI CapEx, over time, this will go back into software significantly, right? We believe that software overall is the more scalable investment, but obviously software needs to run on certain platforms, and these platforms are currently being developed. And this, I think, is the big opportunity also in Abu Dhabi, where, you know, for the first time you actually have these innovation coming from science fiction to reality, right? So we are at this brink of a technology shift. It's almost like a new industrialization area that is about to happen. Yeah? At the same time, the advancements in compute and technology that have happened, yeah, need a regulatory framework and funding that is actually helping to grow something like this and make it a reality. And I think this is where a new Silicon Valley area is also coming, where here you can actually bring everybody together and realize some of these visions, because today it's a nascent market. So regulation, insurance, banks need to have this playground where sandboxes can be a step, but it's actually governments that are.
Do you think we've got that
this.
first mover advantage in the UAE? If you listen to the speeches just a little bit earlier, the pace at which this country is going to move in terms of deploying autonomous on multiple fronts, what kind of an advantage does that give this country in terms of perhaps being a market leader?
Well, being a first mover in that sense is about paving the way forward, right? I think right now the regulation isn't fully written, right? The insurance isn't fully written. The funding frameworks aren't fully written yet. Yeah. And so being a first mover in that space allows you to define that future and not actually be just a customer or a procurer, what we heard earlier from His Excellency. I think this is quite interesting now that we are actually moving to this space where we can lead some of these discussions going into the future.
Khalifa, good morning to you. The Emirates Development Bank, I've had the pleasure of sitting down with the team down there and talking to them about the scale of the capital that they have to deploy. What is the bank thinking about when it comes to autonomy? Make autonomy come alive within that, you know, the S, the M, and the E. What are you doing? And how quickly are you moving at scale towards autonomy? And if so, to where?
Sure. Hello? Okay. Thank you for this interesting question, to be honest. If we look at the commercial banks and if we look at ourselves as a development bank, we are usually more toward you know, the traditional banking aspect of, you know, liking the sectors which we like and moving towards advanced technology, autonomies, AIs, I mean, we can see robotics everywhere now. I just went to Adibek and I have seen that myself, robots running around, and that's really interesting. So from the angle of a development bank, we are trying to be the leader here on the sector of financing, where we're trying to find, I mean, my role more towards attracting foreign businesses, for example. So we will go and try to find a nice manufacturing facility, a real thing, where they want to build robots, where they want actually to start the manufacturing here in the UAE, and we will try to target these to bring them here to make it a reality. So this is part of the journey that I'm leading right now, and we are hoping to expand on it, inshallah, more in the future.
Okay, and we'll come back to the regulation in a moment, because I think that's the one thing out there in the public. It's about embracing and understanding that regulation is at such a high level that we can have trust when it comes to commercial use. Now, Ramon, good morning to you. There you go, maybe switch off the mobile. When it comes to your world, it's within the airline industry, it's within aircraft. You're a massive leaser of aircraft. So talk to this audience about what AI means and autonomous within your world. How much funding is flowing to that? How much more funding will flow towards that? You traditionally lease everything from Airbus to Boeing. So just make autonomous come alive for this audience in your world.
Sure. Can you hear me?
Yeah.
Yep. Okay. So just for the benefit of the audience, what an aircraft lessor does, we buy aircraft from Boeing and Airbus in scale. Avalon has a balance sheet of the size of $34 billion of assets, and we deploy these assets all over the world. and we also offer financing to customers in the form of sale and leaseback transactions, right? So Avalon is involved in the sector early days. We invested in an equity stake in Vertical, which is one of the manufacturers. And we also did the first financing of an electric aircraft in New Zealand with Beta. So our model is, well, when we look at the risks involved in our industry, in our sector, not too dissimilar from the banks, you look at the interest rate, the cost of capital risk, you look at the credit quality risk, right? But we look especially at residual value risk.
So are you the skeptics in the room when it comes to autonomy then? Or are you going to wait for everybody else to prove the case and then you'll jump in?
We are invested, but yes, we are cautious. So you can have the best interest rate environment, you can have the best credit quality, you can transact with Abu Dhabi government, for example. But we are in our industry where we take the residual value risk in the end of a lease, right? So there are instruments today for you to trade down that. So there are other buyers, you can syndicate, you can recycle your capital. And this is a new industry for all of us. So who's going to buy this lease from us so we can trade down and buy more assets? Who knows? What is going to be the residual value of these planes? Nobody knows, right? The development cycle of the traditional aviation takes about 20 years. So you buy an asset today, we take a 20-year view on the asset until the next disruptive technology comes in. With the eVTOLs or flying drones, if you will, the next technology can be next month. And you invested a couple $1 million on a plane, and what's the residual value of that plane? Because in our model, we keep that for ourselves. So it's quite complex, but it's quite exciting. And of course, there are ways to try to mitigate that through residual value guarantees, for example, from manufacturers, right? Now you need to look at the credit quality of the manufacturer to see if they'll be able to back that residual value. There is consolidation and eventually moving, hopefully, I'm not sure if that's a good or bad thing for the customers, but for the financial institutions, hopefully we can move towards something closer to what we have today in the traditional commercial aviation, which is 2 or 3 big players, a number of assets that are all common to each other, a secondary, a tertiary market where you can develop and make bigger bets on that residual value assumption.
I think it's really going to challenge the business models that you've all had, because even as AI develops so much more quickly than perhaps the original manufacturing of airplanes did in the traditional sense. Shama, good morning. For you, you work at the Ministry of Industry and Advanced Technology, you're the Director of Industrial Empowerment. For you, you look at the short-term risk, which I think Ramon very much put his finger on. It's the short-term risk appetite, and then there's the longer-term investment in autonomy and intelligent mobility. How do you square those two things?
Okay. First of all, good morning, and I really thank you for asking such a question, because it can highlight how we can balance the short-term risk appetite with the long-term investments. And how we can do that is by aligning our national strategies with the ambition of the private sector. So today, everything is moving at a rapid and agile pace. And luckily, the government of the UAE is always focused on being proactive, always being lean and being able to adapt to the requirements of the community. And you can see that clearly with the Ministry of Industry and Advanced Technology when it launched its first initiative, or let's say strategy, Operation 300 billion. Now, the Operation 300 billion was focused on attracting more, or reaching 300 billion in GDP from the industry and advanced technology segments. And we can clearly say that autonomy, AI, advanced technology, and all of these things within the manufacturing industry can help align in that field. Now, one of the umbrellas, or let's say the childs that were born from this operation, was Make It in the Emirates, and we always encourage such things to be done. So with these elements, let's say the strategy, the initiatives that are focused, or let's say that are developed within the country, can help align, minimizing these risks, while also ensuring that we meet the requirements of the industry and the people within the manufacturing sector.
Look, assessing risk and regulation, the two R's in this conversation are pretty important. Stefan, even though I joked at the start, and you were quite right, you said, look, Manish, you need to disaggregate between Ramon's world, which is aviation, drones, and the evolution of autonomy in that world, and the data that I was quoting, which was from McKinsey, which was about autonomous vehicles and robo-taxis. You make pretty short, sharp, hard decisions about who you're going to deploy capital to. So just give us a sense of the risk assessment that you make on autonomous projects when they come across your desk.
Yeah, I think the statistics from McKinsey and the general market size, obviously when you look at autonomous driving for cars, yeah? I think
Yes, it was.
That is obviously...
AV and robo-taxis, $300 to $400 billion in revenue potential.
That is only one of multiple different autonomous verticals, basically. But it's interesting because did you know, and or maybe also for the panelists, what is the most job for people or for men under 40 in the world? It's driver. Yeah, so the biggest job in the world for men under 40 is driver. Very funny, right? And that obviously will go away with autonomous driving and robotaxis, or significantly. Yeah? And when you look at logistics, this is even bigger. Yeah? And what we look at is also the aerial solutions, because when you look at the low altitude economy, which is currently being deregulated in China, where you can't see this in Europe, in the US, and even here, this still feels a little bit science fiction that you are taking your flying car to go on a little excursion or something like this. In China, there are actually like 1,000 different kind of aerial zones where you can take your e-hang or your vehicles that you see outside and fly around with them. And I mean, this is still private land, this is regulated, this is not like I fly in a public space or so, but these markets are evolving significantly faster than in the past. Yeah? And I think that's one, if you look at it from an investment standpoint, it's always, okay, how big is the market size today? Yeah? The market size for private flying cars is non-existent today. But we are in the process of a technology shift. That's like the same question that when Steve Jobs was developing the iPad, would he really develop the iPad based on the market size for tablets back in the day? Probably not, because there was no market for tablets. Yeah? So this is where history repeats itself, where Henry Ford, if he would have asked his customers what they wanted, they would have said a faster horse, not a car. Yeah? And I think that's where in this autonomous world, we're moving in completely new categories that are today very hard to define, but they're evolving extremely fast. Yeah? And all this innovation that is currently driven is driven by significant advancements in software like AI, etc. But it's also driven by defense application and dual use applications, which are significantly pushing forward the envelope of what is possible.
I also think it's a human thing. The limitation of our imagination is usually generational, and also in terms of what we're capable of imagining. Amandeep, I want to bring it to you because you made a very, rightly so, a very smart point, which is, who are you insuring? Are you insuring me in an autonomous vehicle? Are you insuring the manufacturer, whether it's BMW, Tesla, whatever else? So just explain to the audience that critical point about where the risk assessment really comes in. Not whether I'm a bad driver on the E11 from Dubai to Abu Dhabi, but whether the BMW, the autonomous driving vehicle, or maybe it's a Tesla, is fit for purpose and the lowest risk vehicle on the road.
Correct. So that's a very interesting question. And for us, as I mentioned earlier, we are redefining this asset class. It's very novel, it's new. And we are looking at this as platforms. These are technology-enabled, data-driven service platforms. And so our assessment also needs to be in the light of usage and performance value. Mm-hmm. Now, that's an interesting area where regulation has to also evolve in terms of, to your point, who are we insuring? And clearly, if you look at the current unified motor policy, it's focused on the liability of a driver, right? And the third-party liability all focuses on driver. It has to shift towards the operator. These would be the entities that are having fleets of these vehicles and operating them. And the risk that we have to cover is really around the cyber risk, and also enable certifications like airworthiness or cybersecurity or connectivity, network reliability, and operational resilience.
Is cyber risk a bigger risk than me? In other words, the risk is the vehicle being attacked rather than my ineptitude.
Look, when you are looking at network connectivity enabled, vehicles, and whether that's the taxis or whether that is the drones, then you have to look at cyber as the biggest element of exposure. So again, like I said, certifications around cybersecurity protocols, and it's a very clear analogy. If you take your current motor vehicle, you do an insurance, but you also do testing. So if it's a 3 or 5-year-old vehicle, you take it for a certification, which you get after testing. So I think those will enable the environment for insurers to be able to support.
Let's shift gears a little bit, Khalifa. You are the assessor and the attractor of new enterprise here in the UAE. But before you lend money, you're ever the banker. You want to know about the collateral. Collateral against an untested technology is so much harder to actuarially assess, isn't it?
Sure. That's a very nice question, to be honest with you. Again, we like thoughts, we like ideas, we like to look at the innovators, like, hey, you have a nice idea, that's nice. Have you tested it? Have you done your homework around it? Who's your target audience with this technology? Do you have 3 years of financials, at least? Are you making enough sales? Do you have offtake agreements? So these all like a way of how we can determine if this is a real thing or if it's just an imaginary thought. And trust me, I've came through many imaginary thoughts. I'll be very honest. Someone will come with a robot that is, just now we're seeing in the news where there's a robot cleaning and doing the, like a housemaid, I think. I don't know what it's called. But trust me, there was a guy who reached out to me for this. Not the same, it's the same concept, but a different technology. You got my point. And I looked at his robot, like videos and all that, and I was like, did you try it on, I don't know, like on your home country, or did you try it somewhere? And he's like, no. And I was like, well, you are at the research phase, research and development, R&D phase. So you need to finish this part, then we can consider bringing you here. We will not say to him that you are not welcomed, but it's more like mature the idea, build on it, bring it, make it more feasible. Because the concept of a collateral, now back to your point of a collateral, yes, even as a development bank, we do ask for a collateral, but again, banks overall, to be honest, needs to think outside of the box, and I'm saying it for the sake of creating a statement that we need to build around it, how we can evolve with this speed of how things are moving. As a development bank, we are already at the stage of actually thinking outside of the box. We're trying to, of course, see where the regularities comes, because if regularities comes, touching on my colleague's points, if regularities comes from the government, banks will, of course, feel more comfortable towards, jumping. And being a development bank, it's logical for commercial banks to, follow. Like, oh, they're doing it, so why don't we? You got my point. So this is something we're working on in terms of collateral alternatives. Nothing is 100%, we are sure about, but we are trying also to, try to understand what other nations have done, right? Like what China have done. Because I went there and it was very magnificent, to be honest with you, in Investopia back on September. And it was really nice to see how things are really evolved there. They have a place to test these things, actually, like autonomy, AI, very big places. I've not visited it, but they told me, like the Chinese themselves told me, please welcome to, join us. So yeah, looking forward for...
Yeah, I do think there's a certain amount of xenophobia in the world in terms of how the media present the speed with which things are moving in China relative to the reality. And they are very, very sophisticated and very advanced from a technological payments and adoption point of view. Now, Ramon, you buy aeroplanes, you lease them to, I don't know whether Emirates is one of your clients or Etihad, let's just say they both could be at your doorstep. That is your business model, okay? What is the most interesting autonomous concept that you may consider adding as an incremental revenue stream? Fly the kite higher.
Well, we are. Well,
because people must come in and suggest things to you all the time. We need to advance. We need to move forward. We need to move the product suite forward. What do they come in and say to you, let's do from an airline point of view?
yeah, so the application on the airline side is quite interesting, right? Especially now after COVID, we've seen an increased and maintained yields in the first cabin of the plane, so people willing to pay more for better service. So there is a massive synergy for certain airlines and certain cities that airlines can add eVTOLs to their product offering to offer to pick you up at home, drop you at the airport, put you in first class, pick you up in the airport where you're going, drop you at your hotel, all taken care of by the airline. So that is a very interesting application, and that is appealing to us because we know these airlines, we know their credit risk, we have other assets that are, to your point, that we have cross-collateral in other transactions. We're not just limited to a startup flying eVTOLs with a different credit risk. So there is a very interesting application on our side as well. When we look at our own synergies and how we can leverage our platform to our existing capabilities to, plug in other assets. This is an aircraft. So you have asset management, you have engineering, you have the technical team looking at it. We need to raise debt to buy it. We need to have a very capable marketing and sales team to originate these transactions, and you have established relationships with many of these players. So for us, that is the play. The eVTOL is the play. I'm not sure if there is room for us to add more, but I think anything that flies and move people or cargo around, we're going to be looking at.
Well, I want to remind you that when you fly an economy, it's a different experience.
We're going to get there.
You're gonna make economy flight travel.
I think is step by step, step by step.
It can say chicken or beef in a different language. Okay, Shama, for you, you have Khalifa in terms of the development bank. You've got the venture capitalist who wants to spec and take a little bit more risk. Ramon wants to be innovative, but when it comes to tying together public-private partnership, this is the synthesis of assessing risk, but perhaps having the ability to take more risk because you are the government and it is your responsibility to drive innovation. Where is that working well in autonomous? What are the objectives? Let's say by the time we get to 2030, everybody's got these 2030 goals. So if I said to you, where's public-private partnership working best on the journey towards 2030 and its ambitions in autonomous and autonomy, how would you describe that?
Well, I can clearly say that the public-private partnerships can be clear and well-known and recognized across the UAE since a long time back. One of the examples that we have today is, for example, our partnerships with multiple private sector entities, whether it is procurement opportunities, offtake opportunities, or even injecting advanced technologies and transformational indexes across the industry and manufacturing prospects. Now, that's one of the examples. We have also a regular approach where we would love to develop public-private partnerships across different priority sectors that we usually announce during Make It in the Emirates. For example, we have launched a few accelerator programs that are focused on different segments. You've got innovation focused, you've got entrepreneurs focused, you've also got the technology aspect and many more. And we usually do that on a regular basis per demand and per the requirements of the manufacturer or the investor itself. We also have launched multiple partnerships with the private sector within banking segment. So for example, this year itself, we announced a partnership with 5 different commercial banks, national commercial banks, that have accumulated more than 40 billion in investment opportunities that they are willing to finance, whether SMEs, manufacturing and so on, even in innovation, autonomy, you name it. You also have the launch of the first equity fund for the industrial practice that was launched by EGF, the Emirates Growth Fund. They also focus on these areas as well, as long as you have a clean, let's say, solid foundation for your business. There are multiple efforts that are done by the government, whether it is via MOIAT or even other federal entities or even local governmental entities. And we always encourage that to happen. Today, we cannot prosper unless we have these relations with the private sector because they are the movers, let's say, and we are the regulators. And if you would say what we would do for the 2030 visions, I would sum up with focusing on 3 specific elements. Having clear regulations is number 1 and key. Continuous efforts to clarify these regulations, the demands, the requirements to actually automate your operations is key. Second of all, developing, let's say, partnerships with different entities that can jointly finance or jointly move up and scale up these efforts that are related to the autonomy. That's a second one. And thirdly, developing new incentives, enablers, focus groups, activations, and so on. These are the main pillars that will enable your industry to go forward.
Okay, ladies and gentlemen, that is your panel on financing and ensuring the asset classes of the futures, the challenges and the opportunities. Good morning.